What's up, everyone? Let's see, can you hear me? What's up, everyone? So we got a few Fed speakers this afternoon. Let's go check our economic calendar. 1 p.m. Governor Bailey is going to start speaking. Then FOMC member Barkin speaks. 15 minutes after that, we have Jay Powell coming to the stand. I don't know if we're gonna trade. Definitely not gonna risk our PAs on news. That's for a fact. We have evals we can try. Let's see who starts speaking first. Some impatient market's really chopping around like right now. And in this range since this big sell-off yesterday, trying to find a base on the Qs here at 430s. SPY on the other hand, also making that big sell-off move lower yesterday. Put these previous highs from the beginning of February bouncing back up. That looks like about 50% maybe. Just under. Still consolidating. Waiting for the volatility to pick up potentially. And we'll figure out where do we think the market wants to draw to, go to.
So you think you know Wix? Do you really? These audio effects won't only work in OBS Studio, but also outside of it. For example, at Discord, Zoom, your game chat. Trust me, this is the only video you need to watch to make your microphone sound as good as possible. My previous video on this topic has 1.2 million views, and people have been asking me to make an update. So here it is now. I'm gonna be using the HyperX Solocast. So many people wanted me to use this microphone because it's the #1 best-selling on Amazon, and they think they need this mic to sound good. However, this one is almost half the price. I've used this mic before in a console streaming setup, and I was really impressed with the quality. I'm gonna use this microphone together with a boom arm. This is a really cheap one. I will link it in the description, because using a microphone arm is the single best upgrade you can make to your mic. I mean, listen to this difference. When the mic is standing on your desk, your mouth is far away from the mic, and in order to sound loud enough, you will need to boost the volume, and that will sound kind of like this. However, listen to the difference when I go closer and closer to the microphone. Also, the closer you are to the mic, the less background noise you will have, because the microphone needs to be less sensitive. You're really close to your voice, it's extremely loud. You can lower the sensitivity of the microphone, but this also means
So we're still just sitting here waiting. What's going on, guys? Thanks for joining. We're waiting for an A+ setup. That's what we're waiting on. Let us see if we can get one of those. Getting a little pop up, a little spike. Before it was like a little butterfly pattern. It's looking bullish. Definitely looking bullish. Don't want to be too early to the party though. Just chopping around in the range.
that are all animated. They have overlays, they have alerts, they have labels for follower, top donation, all that stuff. Even things like a countdown timer, and for one subscription, you get access to all of those packages. You can just switch between all of them and then see which one you like. And therefore, your stream is never going to be boring, and it's way cheaper.
Well, my bias is shifting bearish now. If we're looking at the short-term time frame.
Okay, now before making this microphone sound amazing with all of these filters here, there are two things you absolutely need to do. We're gonna have to make sure that before applying all the filters, the volume is right here above in yellow. But before doing that, you need to make sure that you have the perfect starting point for all the filters to go for. If I just move it to 100, you will see in OBS that I'm going into the red. It's kind of distorting, and so I'd say move it to the left, and then just talk like you would on the street, and then gradually move it to your phone. Go to levels, and then move to the red. That's even worse. Now the first thing you need to do is right-clicking your audio icon here, go to sounds and to recording. Then you double-click your microphone to go to levels. And then this is the first place where you need to change the volume before adding or removing gain and stuff in OBS. So I did set the mic to 50% gain here. If I just move it to 100, you will see in OBS that I'm going into the red. It's kind of distorting, and so I'd say move it to the left, and then just talk like you would on the street.
Yeah, so we're just sitting here still waiting. Broke this short-term low, took liquidity, rechasing past 50% of this break of these highs right here. J Powell about to come on, so just gotta have discipline. That's how you last longer, having discipline.
Gradually moving to the right until the volume is like at the end of the yellow, maybe a bit before that, and that's the perfect starting point for all the filters we're going to add. If I shout out, hey,
trying to get this audio bar right by the yellow, you know.
This is the perfect starting point. You can now go through the
Cannot seem to do it. It's just right there. Give me 1 second, guys. Just trying to move this volume bar a little bit, just a little bit into the yellow.
Now for everyone, the order of all these filters is extremely important. First thing you need to add is noise suppression. A lot of people first add all the effects and then noise suppression.
Listen to my microphone status. So still just chopping in this range. I mean, there's nothing to do here, so. Come on, market, do something. Do something for us. Even if I have to miss the trade, that's okay. Let's do something. Look at this. What is this? What is this? It's a pretty big range. 17,930s. 17,830s. Even if I have to miss the trade, that's okay. Do something. What is this? Range 17,930s, 17,830s.
But what you're doing then is amplifying all the noise that's within the audio and then afterwards trying to remove it. However, you should remove the noise first and then use the clean voice audio to add all the effects. You click on OK and there are a bunch of options. That is, if you have an NVIDIA graphics card. If you don't, you will need to use one of these two options. All of these work the same. You click on it and then you just choose the suppression level. The harder you suppress the noise, the more it will affect your voice. You should play around with which one sounds better to you. Or an noise has no options. And then if you have an NVIDIA graphics card, the noise removal is absolutely amazing and it will barely affect your voice quality. Now, to be fair, this noise removal is absolutely perfect for normal stuff. Now, if my editor boosts my volume a bit, you will hear the noise and then you will hear how good this is. As you can see, it completely removes background noise, so that's perfect. The reason you would want to use NVIDIA noise removal is that this removes everything from the background, even people talking, a truck driving by. It's absolutely crazy, but this one is great as well. By the way, real quick, if you're not hearing your own microphone, I completely forgot. You can just go to the audio mixer, press one of these icons, go to advanced audio properties, and then next to your microphone source, you just want to change it to monitor and output, and then you will hear your microphone like I'm doing right now. We want to use a new filter that's new with this updated three-band equalizer, and this is a perfect filter to change how our voice sounds. So we have the highs, the mids, and the lows, and as you can see, when I add the lows while I'm talking, I will add a lot of bass to my voice, and if I remove it, my voice will sound much more thin. I'm gonna set it to 0. Then the highs, this is to sound much more crisp. As you can see, this is kind of like a radio voice, it's way too much. If you lower the highs, then this sounds really like muffled. I don't know if that's a word. And then the mids, this is really hard to explain, but when you reduce the mids a bit, you will always sound a bit more broadcasty like, a bit more professional. However, if you overdo it, that's definitely not something you want to do. But in general, I'd say reduce the mids a bit, then maybe add a bit to the highs, and then the lows. This will depend on your microphone and your voice. If you have a really low voice, then adding some lows here will probably be way too much. However, if you say I have a really thin voice and I want to sound a bit more like more
Chopping, slowly, still chopping. Every minute that goes by. Name of the game is patience. The issue I have is I have a low voice, so everyone that's on these YouTubes have, like, I don't know, a higher tone voice than I do, so it's hard to find how to change these settings. Just slowly and surely, just like we're doing in the market. Might need some coffee soon. Look, this thing looks like, what does this look like? It's like a little snake. It's like popping up through the ground. It's like poking its head up. Does it want to go? Does it not want to go? Just slowly grinding up until we probably gotta start breaking some structure to the downside. 17,900 psych levels. We've only gone about 30 points past this point. It's the highs of yesterday. It's the first green candle in this 3-minute chart from this leg down. Order block up here at the 17,950s. Grind it up for 12 minutes, and this 2-minute candle takes it all out. Stair step up, elevator down. My evals are on top step X. Still using that $4.50 discount for those 5 accounts. Kind of just treating those as practice accounts. I want to build good habits. If you continuously do the same thing, you build a habit. Now that's where you get a choice. That's where you have a decision to make. Do you want to continuously do the wrong thing, or do you want to continuously do the right thing? Do you want to build your good habit or bad habit? is this chopped though? Jeez. I like to watch the sky a lot of the times. See if I can get the sound to work. Look at that drop down.
Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real strength, but gradual normalization. Turning to price stability, our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. You know, we took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Well, thank you. I think that's a really important frame for our discussion today. One of the things that I remarked on when I first got into public life was how often I saw my international peers as we moved around. And when I see the two of you on stage together, I know that often you see each other at G7, at G20 meetings, and I think it would be quite interesting for the audience to understand, you know, how collaboration happens or doesn't happen internationally, how central banks work together or don't work together. So, you know, maybe I could ask you, Jay, to give a perspective on how that happens from your vantage point.
Sure. So to give you an idea, we do meet quite regularly. So Tiff and I attend 2 G7 meetings per year for ministers, that's finance ministers and central bank governors. We don't attend the leaders meeting, but we attend, in the United States, but we attend the meetings with the finance ministers, which Bill was, and also 2 G20 meetings. So that's 4 meetings per year right there. We also have 6 meetings at the Bank for International Settlements in Basel. One of those is now virtual, but we're and that's only central bankers, no finance ministries. So it's all central banking stuff. And, you know, it's economics, it's financial regulation, all those things. We also come here to Washington, or every third year we go someplace else twice a year for the IMF World Bank meetings, which is kind of what everybody's doing in Washington right now. So it's a lot of meetings. What do we do at these meetings? Fair question. Essentially, the central bankers are having an ongoing conversation about what's going on in their own economies and their own financial markets, their own regulatory world with each other. And we're also talking about the big global issues of the day, as you would expect. So some of which are really the business of the elected government, not the business of the central bankers. But we have that discussion. It's more or less ongoing. We're seeing each other all the time. They're very informative, these discussions, and they really are, for me anyway, part of the way that I get to thinking about what the right policy is for the United States, is to hear
before
what's
last
going on
round
around the world, what's happening globally, and how people think about that. So it's very, very useful, particularly though, given our close cultural, financial, and economic ties
still able
with
to
Canada.
trade, and then I got
Those discussions
rebuild.
are especially fruitful and important.
And they said
I have
that
regular conversations with Tiff.
I got rebuild with
keep
the
very
same
close
balance
track
account.
of
It was
the
super
actions
weird.
of the Bank of Canada. I read Tiff's press conference transcripts carefully and pay close attention to that. Tiff did mention the similarities and differences. I'll say one more thing, which is we go to Basel, as I mentioned, 5 times a year. You're a long way from home, and there usually is. We're there for 4 or 5 nights, and there are usually 1 or 2 nights off. So we go looking for someone to have dinner with, and very frequently we wind up with the Bank of Canada delegation, who are really good and very funny and a lot of fun together. So we have a very close relationship with the bank and great respect for that institution, as I'll have a little more to say about lately. One other thing I'll point out, though, about our relationship is we did do, as Randy pointed out, our first review of our monetary policy framework really ever. And we looked around. The Bank of Canada also does regularly, I think it's every 4 years. In any case, we really looked to the Canadian model and other models of how to do that. We talked to people at the Bank of Canada about how their regular framework review went. So we really benefited for that. So that's what I'll stop.
In my head, I was thinking of going longer.
Tiff, similar perspective from Canada?
Yes, I mean, I'll just add a little bit on as Jay outlined, certainly from my perspective, one of the best parts about this job is we do, the international community, the central banking community, it's not like a commercial bank where you're competing against the other bank. We're all in this together. And if we get it right, we all help each other. So there is a considerable openness. And, as Jay outlined, I think there's a few different functions. Yes, obviously, if you're in Canada, we have our own group at the Bank of Canada that analyzes the U.S. economy, forecasts the U.S. economy. It's very important to Canada, but the Fed's group is a lot bigger. They got a lot more experience. Hearing what the Fed has to say is incredibly valuable for us. The other thing we do, though, is it's more than just the data and the forecasting. It's thinking through the scenarios.
Entries,
what risks
94
are on your mind,
stops.
Jay? What do you think could go wrong? What are the scenarios? How would we handle it if this happened, if that happened? Being able to put your heads together and think through the risks, the scenarios, the strategy. There are also a number of really, I would say, sort of behind the scenes, very central banky technical issues that nobody really thinks about except central bankers. But what are the mechanics of QE? How do you exit from QT? How many settlement balances are we going to need to? Fortunately, those are things most people don't have to worry about. They are critically important for the implementation of monetary policy and that sort of plumbing working of the financial system. And being able to talk to people who are thinking about these things as much as you are is hugely valuable. And then the last thing I will say is, there's some things that we're only going to succeed if we do together. The obvious one would be financial supervision and regulation. Our financial systems globally are highly integrated. We were deeply reminded of this in the global financial crisis. What happens in other countries affects all of us. And money flows across borders. So, we have to do that together or it's not going to work.
Well, maybe we can drill into that for a minute. Obviously, we recognize that most of your work is focused on the domestic markets, but in times of crisis, there's real challenge, as you mentioned in the COVID period, the global financial crisis. That you were engaged with, Tiff, earlier in a different stage of your career. And for me, it was remarkable the number of interactions with counterparts around the world during those crises. So maybe a question to both of you is, what kind of interaction happens during periods of crisis? What doesn't happen? Are there things that we should be thinking about differently in order to prepare ourselves for those challenging moments and making sure that the financial system's resilient? So again, maybe over to you, Jay, to react to that and hear your thoughts.
Sure. So, our economies, our financial markets, all of our institutions are deeply intertwined. And when there is a situation where there's serious stress, you need to get a global perspective. You need to get perspective around the world. And you have to do that very quickly.
On Twitter.
And we, of course, can move quickly and effectively on the domestic
Just your
front.
usual reminder that
The
trading
thing that
is super
you
fucking
figure
hard.
out in those times is that all the time
Takes
you
a long
spent at
time
Basel and at the G7 and
learn.
G20 meetings, your colleagues,
Nothing
you
is
know and
guaranteed.
trust, respect their judgment, and you
You're
don't have
going
go
to
through
lose money.
that phase of gaining trust in people. You understand each other, you speak the same language.
And likely
so
want to quit a
there's
handful
lot
of
communication.
times.
The level of communication is pretty high anyway, but during crises, it goes
You gotta
it goes
want
very
it
high. You're constantly
more
talking
than you want it to
constantly
breathe.
talking to
Long-term
other central
vision.
bankers around the world, and also political leaders in our government, and that sort of thing. So that happens a lot. The sense of what you're doing, again, is mostly sharing information and ideas about what to do. There may be a proposal that people are looking at, and you're talking about that. So it's very useful. I say one thing to point out is it's less about coordination than it is about
What else we got?
talking
What
and
else we got?
understanding for one reason, or at least it was during the pandemic, and that was because almost
Powell
every
said the
country's
recent data
interest rates
shows
were
lack of
close to
further
zero
progress on
when the pandemic
inflation.
hit, and so there wasn't policy space for most economies, most central banks, to do a big coordinated rate cut. We did cut very quickly to zero, but I think we were higher than almost any other nation in terms of where our policy rate was. But anyway, there's a lot of communication, and those relationships that you built up really do help at that point. In terms of you asked about learning, what have we learned? I think that the pandemic's going to teach a whole lot of
Buyers
lessons
definitely
over
stepped
time.
up there.
I still think it's
15-minute
too early
chart.
to say what they
Took
are
out
with
liquidity.
confidence, and I'll point out,
Boom.
look at
Right back up to the top of
pandemic
the
has
range.
surprised us over and over again, most recently in the United States, the remarkably strong performance of the economy at a time when virtually all economists were expecting a recession. So I think if you'd asked for the lessons of the pandemic a year and a half ago, you'd get a very different answer. Now, I think in a year or so, we'll have a lot more answers. It is a unique set of circumstances, and we're still learning, I think, but we will try to learn those lessons. Different point, I would say, about the bank stresses, another crisis, at least here in the States. I do think we can and have learned the lessons of the stress of early last spring, and I would point to a couple things that we embraced pretty forthrightly. One was that supervision was not tightly focused on the right things, was not proactive enough, was not forceful enough, and we've tried to take steps to remedy that. I also think there will be some regulatory initiatives for banks of that size and with those characteristics in time. So I do think those are lessons that we have learned.
And from a Canadian perspective, similar lessons or different ones?
Yes, I think there are similar lessons. Maybe I'll just give a couple of other examples. First though, I will just underline, when a crisis hits, you're faced with a situation, you have to make decisions, and you have very limited information. The other reality is you have a pretty narrow window to act to be really effective. And for both those reasons, being able to speak, directly to Jay, to connect with our other colleagues, finding out what's happening in their jurisdiction, how are they thinking about it, what do they see as the options, it is hugely important in a crisis. And that it's a little more, though, than just information sharing. I mean, I think it helps us avoid unintended consequences of our actions. Sometimes you do something and it works for most parties, but not one party. And in a crisis, it's the weakest link that can take you down. So you've got to be careful. It also, I think, boosts confidence in the system. If we're acting in a way that is coherent together, it boosts confidence. It looks more like a plan than a haphazard policy response. Just to give you a couple of examples, I wasn't actually governor at the start of COVID. Jay was there, but certainly looking at it from the outside, the coordinated actions of major central banks to reopen fixed income markets, providing liquidity, providing market making of last resort in scale. It restarted, reopened core functioning markets. And by all doing it essentially at the same time and all working in scale, the whole global market restarted. If that had not happened, this crisis would have been a much deeper and more severe crisis. And then the other one I'll highlight is coping with the inflation as we came out of COVID. By all being resolute in our commitment to restoring price stability, by all matching our words with forceful action, raising rates rapidly, we all helped each other. I mean, it helped reduce global inflation in goods, which was really the first part of the inflation surge, and it helped keep inflation expectations in all our countries better anchored. And I think it is a key ingredient in how we have all managed to get inflation down a long way back without causing recessions in our economies. And the last point I'll just highlight is something you said. Occasionally this coordination is very explicit. So for example, at the time of the global financial crisis, there was a coordinated G7 interest rate cut. I remember clearly because it happened at 3 o'clock in the morning in Canada, which was a little bit of a technical challenge. But most of the time, it's not explicit coordination, but it is those conversations. It is that shared information. We have similar objectives, similar goals, similar tools, and we're sharing information, and that leads to a coordinated response.
Well, maybe you could spend a little bit more time on that from the Canada-US perspective. So Randy mentioned in his opening comments the idea that when you're in Canada, you're living next to an elephant. And I think a lot of Canadians would assume that that Canadian policy has to take into account U.S. policy. So maybe could you give us a perspective into how important that is for your deliberations, and how that factors into decision making, the U.S. approach?
Well, look, I think it's pretty clear that our U.S. economic relationship is by far our most important relationship. Our economies are highly integrated. 35% of our GDP is exports, and 75% of that goes to the United States. So multiply, that's a big chunk of our GDP. Our financial markets are also very integrated. In fact, yesterday I was in New York, and when you go to New York, you are just reminded how integrated our markets are. I was at the New York Stock Exchange, and all over are cross-listed Canadian companies on many of the screens. Our financial systems are very integrated. Our banks have, most of our large banks have operations in the United States. Our pension funds are big investors in the United States. So we do spend a lot of time understanding what's going on, trying to understand what's going on in the United States and looking at the implications for Canada. There are, though, I highlighted in my opening remarks some differences. Another important difference I didn't focus on is, both our economies have big manufacturing sectors, big service sectors, large commodity sectors, but the commodity sector in the Canadian economy is quite a bit bigger than it is in the United States. Oil and gas, agriculture, forestry, mining, fishing. 40% of our exports, 13% of our GDP. And the commodity cycle can be quite different. And we have a flexible exchange rate that does help absorb the differences. And I think it's an important reason why historically sometimes our monetary policy do differ. Our cycles are often quite similar, and certainly through COVID, we had a similar shock and a pretty similar cycle, and our monetary policy has been quite similar. There have been other episodes, though, where, particularly if the commodity cycle is different, you'll see monetary policy diverge somewhat from the United States. There are limits to how far it can diverge, but as I emphasized, we have our own currency, we have a flexible exchange rate, and that absorbs the differences to allow us to gear monetary policy to what we need to do in Canada.
And Jay, from your perspective, obviously the U.S. has an outsized role in the global economy, and I guess we'd be interested in understanding how much time do you deliberate on what your actions will have as reactions, and how much do you think about, you know, what's happening with global markets as you come to your conclusions?
So I'll start by saying that each central bank serves a domestic mandate, which is, in the case of Fed, is using our tools to achieve maximum employment and price stability for the benefit of the people we serve. So it's a domestic mandate. But in the case of the United States, we fully realize and appreciate that our decisions can have significant effects on, not just on Canada, but on, or Mexico, but on countries around the world. And that's all the more so because the dollar is the principal reserve currency, which strengthens the transmission of our policy through the global economy. So we also know that that those effects on global demand from our policy changes can have an effect on the United States as well. That can rebound to the United States. So we're very, very aware of all of that. And for one thing, we try to be very transparent and predictable, given the flow of data and events. I mean, you have to move quickly sometimes, but we do realize we have a special obligation to be predictable and transparent, and that benefits us in doing that as well. So international spillovers, of course, are an important consideration. We do track that. Ultimately, though, we think over time, the most important thing we can do to support the global economy is to deliver on our mandate of price stability and maximum employment here in the United States.
And is that, you know, have there been changes in this current cycle that have driven any differences? I mean, you talked about the different drivers for inflation this go around from previous periods of inflation. So do you think about it differently as you approach these things?
Yeah, well, specifically on inflation, I do think this is different. This is not simply the more standard case of overheated demand, which has been the typical thing in the post-war era for the U.S. economy and other major Western economies. There are similarities and differences, and I would characterize it this way, that the inflation that arose suddenly really in the early part of 2021 as economies reopened resulted both from constrained supply and also elevated and rechanneled demand from services to goods. So if you remember, and I'm sure will, there were unexpected widespread shortages and supply chain failures on a scale not seen in recent memory. In the U.S., several million people had left the labor force, creating a severe labor shortage that was more fully felt once the economy reopened, leading to a huge spike in wages, but also in the ratio of job openings to unemployed workers. So very unusual situation. Households had elevated levels of savings, and demand was very, very strong as well. So we thought, what's different is, have thought since we've understood the situation, that restoring price stability would require both the unwinding of the pandemic-related distortions to both supply and demand, as well as the effects of
Looks like we're getting a little quick dump down.
Which would give the supply side time and space to recover.
Didn't make a new
and we
high.
think today that we're seeing those two things working together to bring that end about.
The 17,900 still acting as
really,
resistance.
In a large way, a supply side story. What happened was the supply side really recovered in 2023. We thought that it would recover in 2021, and in 2022, I was beginning to lose hope. And then in 2023, you saw the shortages and the issues with the trade pipelines.
Resistance.
Not fully resolved, but largely resolved. You saw the U.S. labor force shortage alleviated by both higher participation among people who had dropped out of the workforce, but also from immigration. So that was the year of the supply side recovery. And you saw the core inflation rates drop by 2 full percentage points in the face of very strong growth. So that can only be explained by the enormous increase in potential output, supply side increase over that year. So that's how I would say it's different this time.
And Tiff, maybe you can
I'm
tell
doing
us
some
how
quick
it's
laundry,
different in other
sorry.
ways in Canada.
Let me know
So
if it's
we,
too
talked
noisy
about
in
the
the background.
similarities and the similar approaches to dealing with inflation and the the positive results. But we've seen a divergence in Canada with respect to growth. So clearly there's some differences too. Maybe can you reflect for people what those differences look like and what the ramifications are for you?
Yeah, I will focus on the differences, although I will stress, I think the main story is the similarities. And as Jay outlined, what is so unique about this whole cycle is that supply has played a much bigger role than we're used to. And from a monetary policy perspective, we don't have as good line of sight to supply as we do as demand, and we don't have any tools to influence supply. Our tools work on demand. In terms of what has been different, if you look at the Canadian economy, growth was essentially zero in the second half of last year. And what that meant was the economy, which was very overheated, supply caught up with demand. In fact, it more than caught up with demand. The economy moved into excess supply, and we're now seeing the effects of that in terms of relieving price pressure. So, why did demand slow more in Canada and the United States? I think that is a difficult question. I pointed to a couple of things in my opening remarks. I think productivity growth in the United States has been a lot stronger. You've gotten more supply than we have, so you've been able to grow more with less inflation or less inflationary pressure. And then the second thing is I think monetary policy is having more traction in Canada because the structure of our mortgage markets, half of mortgages have renewed in Canada. And even if your mortgage hasn't renewed, it's renewing in the next couple of years probably. So you're thinking ahead, thinking, oh, when it renews, I'm going to have to be paying a lot more on my mortgage every month, so maybe I should be saving more money now. So we're seeing that effect. We've had weaker consumption growth. And certainly that's been somewhat masked by the fact we've had very rapid population growth. But if you look on a per capita basis, you can see household spending per capita, per family, has actually gone down, even though growth has not been negative overall. I think moving forward, we are actually seeing growth starting to pick up. The first quarter of this year looks pretty strong. Probably see some choppiness quarter to quarter, but overall we think that strength we're seeing in the first quarter will be sustained through the year, where we think on a quarterly basis growth is going to be averaging about 2% per quarter through this year. That's partly we're starting to see some pickup in consumption. Partly it is the resilience of the U.S. economy that is supporting our exports. They've been very resilient. And then coming back to inflation, I think those, broadly speaking, the path of inflation is pretty similar, but you are seeing, I think, some of those differences in the dynamics of the real economy in inflation. Our last few inflation readings have been reasonably good, even though total's still close to 3. Core has been, the last few times ticking down, and if you look at the more timely 3-month measures of core inflation, there is some downward momentum in underlying inflation, and I think that reflects the fact the economy is in excess supply, and that is relieving those price pressures. We're certainly looking for evidence that's going to be sustained. That's what we're looking for right now.
Well, I know that both of you realize that one of the key things we were trying to emphasize today was the importance of the Canada-U.S. relationship, and I also really appreciate all of the comments on the importance of trade to both of our economies, trade between our two countries, and foreign direct investment. And so while you're not trade policy experts, and I get that your organizations, that's not the focus, I really appreciate you giving us a little sense of, how do you think about trade in economic terms and the importance of that, and how that factors into your economic outlook. And specifically, we're thinking about the importance of the agreement between the United States, Canada, and Mexico, and wondering how you think about that in terms of its impacts on trade in general, on labor markets, on supply. So maybe I could ask you, Jay, to give us any reflections that you might have on that and deliberations impacts.
So I guess I need to start by saying we don't do trade policy. We don't really comment on trade policy other than to say that it's clear that we have a mutually beneficial, large, substantial, ongoing, healthy trade relationship with Canada that we very much welcome. Maybe I'll add one more thing, which is I want to focus on a particular export of Canada that I think somehow we just desperately need here in the United States, and we can't get enough of it. And that is Canadian comedians and comic actors. I started to count the number of really great, funny people, and I limited myself to 10. So Jim Carrey, Martin Short, John Candy, Mike Myers, Norm Macdonald, Rick Moranis, Dan Aykroyd, Catherine O'Hara, and Andrea Martin. And I could go on. So something's going on up there. The Americans love Canadian. If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
That's a small but important part of our trading relationship, I guess. Tiff, all jokes aside,
Yeah.
any comments from your perspective?
Yeah, well, first of all, as Jay underlined, we don't set trade policy, but let me just say, try to give you more of a picture. I mean, first of all, you just look at our two countries. The east-west border is the longest border in the world, and it's a long way across Canada. So it often makes a lot more sense to trade north-south than to trade across the country. And that's really, it comes down to geography in some sense. I mean, that's fundamental to the interties we have across our countries. Many Canadians are closer to fellow Americans than they are to fellow Canadians, just the nature of the geography. You look at what are the things that we buy and sell? Well, some of the biggest things, in Canada, we buy a lot of consumer goods in the United States. We have a very two-way relationship on motor vehicles. You buy a lot of the motor vehicles we produce. We buy a lot of cars and trucks that you produce.
One of these Fed members
Similarly,
speaking
energy.
says something and the market
We're
just
both
rips
energy
to the moon.
producers.
I
It
think
often
overall,
makes
we
more
just
sense to
chop
trade the energy north-south
or
than
head
to
down
ship
to the
it
lows
across
a
the
little
country.
bit.
So we have a very dynamic two-way energy relationship. And you look forward and you think about how much electricity the world's going to need. I expect that relationship is only going to grow. Another element that is growing quickly, and maybe that's partly comedians, is the fastest growing part of trade is trade and services. Now, if you want a haircut, you still have to do it in your own country, unless you want to go to New York to get a really fancy one. But but increasingly, a lot of services are highly tradable. The internet has completely changed how many things are delivered, and so you're seeing Canadians are increasingly importing a lot of commercial services from the United States. And then the final thing I'll say is on USMCA. Obviously, for both countries, the market access is key. The other thing I would underline, though, it's also the certainty about the market access. The certainty that American companies have that they'll have access to Canadian markets and Canadians will have access to American markets. That allows businesses to make investments, to deploy their risk capital, to commit to the future. And it's that certainty of access that is really key to building investment. I'll stop there. Thank you.
Well, I'd like to thank both of you for taking some time with all of us. I think if we had looked back a couple of years ago and reflected on what we were thinking back then might be the trajectory of our economies, we probably wouldn't have had an expectation that we would have been where we are today. We would have expected more challenges than we've faced. And I think we need to recognize that the stewardship that the Federal Reserve in the United States and the Bank of Canada in Canada have been responsible for has made an enormous difference in citizens' lives. I mean, we're in a situation that is virtually our best case scenario. So it's probably not often enough that on stage you're recognized for that important work, and I want to thank both of you for all that you're doing for all of us in making that the reality. And also I want to thank you for taking some time here. I mean, we are reflecting on the fact that in a couple of years, the U.S.-Mexico-Canadian trade agreement will be looked at again. And we want to reinforce the importance of working together, the importance of collaboration and cooperation, and really great trading relationships. So this is an important way for us to start this off, seeing the collegiality between the two of you, knowing how well people work together is really important for people. So thank you very much, and I know it's a busy week for you, so we appreciate also taking the time during this busy week. So thank you. From the Canada Institute, I'm going to ask Zabi Delgado to close off our session today.
Thank you, Bill. That concludes today's program, everybody. Thank you all, everybody in the room and online, for joining us today. I also want to give a...
All right, guys. So I'm sitting over here eating sunflower seeds. Market really didn't react that much. Sideways. My apologies, I'm late. I was at Jiu-Jitsu. For whatever reason, I thought this was at 2:15 Eastern time. So I thought I had a little bit of extra time, but, you know, that's how it goes. And the market really just kind of underreacted here. I see people arguing in chat. What did you guys think of the speech?
Looks like they're done speaking now. It's pretty big volatility, but these candles are huge. It's looking more and more like a high a day breakout. Straight up. It just went up 24 points. This candle just went up 27 points. What? This candle just went up 34.5. Did we not just say it's looking more and more like a high of the day breakout?
You're not just say it's looking more and more like a higher day breakout.
And then just ripped up. Just ripped all these shorts faces off. Dollar just dumped all the way down. This was literally sitting at a little tiny doji. It just finished speaking and the market ripped 100 points up. What? 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 Alright guys. That's crazy. just retrace that entire move. Jeez. That's no bueno. When entire moves get retraced, it's no bueno. I'm gonna go get some coffee. If I went long here, we're dumping straight down. I'm not gonna take this long right here. So by the time we come back, I think we'll be at the highs. We'll be right back.
Phew.
we go along here up to the 920s. Once we just chop down and versus the scat, head to the 46s. Excuse me.
doesn't seem like a lot, but $85 versus 105, that's $20 a month. You have 20 accounts, that's $400. You know, for what? What am I gonna? $400 extra for what? Forever Kazi, what's going on, brother? I'm gonna trade it tomorrow, Johnny B. I said I was gonna trade it today and I forgot, so I just added it before to the copy trader. So, it'll work tomorrow. What is an ATM? So ATM is when you use bracket order like this. So ATM is automated trade management. Is that what it stands for? Well, let's say you wanna. Oh, this account belongs like this. Let's say you want to place one like that. You can do it. So as a bracket, right? So if I get long here, profit target, stop loss. On Tradeovate, you can't do that. Copy trade accounts. You only have to do the market. Okay, goes into the account. On the account. Oh, advanced. Lorenzo, yeah, that was my Apex account for April 5th. So I received that. You could do that with Rhythmic, yeah. You could do that with Tradeovate as well, but you would have to use a different platform. Like you have to use Tradeovate data to trade on Ninja. Which there's no point on Tradeovate. How do you copy your trades? Quant Tower. Quant Tower is a built-in copy trader. It's really awesome. Copy trade using prop firm. Select whatever prop firm you want. Really good. Yeah, Tradeovate is good if you use a Mac. If you're a trader, I think you should invest in those. Trading is a business, and same as in DJing. In DJing, I would never use Windows laptop. Same thing in trading, I wouldn't use a Mac. Even though I have, I'm pretty sure that somewhere.
Sorry guys, gonna have to hide the screen for a sec.
So here, this is June. So I did trade on Tradeovate a little bit. June last year. My first two out today was on Tradeovate. So in my car, when I was driving around, it was a nice day out. I parked in the parking lot somewhere, got the Red Bull, and just traded. Let's see though. Hopefully next year at this time, I'll get this car. That was my goal last September. And my car is coming on June 27th. This was a you had the track. I was trading stocks back then. This is September 1st. My trading stock.
November was my biggest payout at the time on January 7th. 24,000. I thought that was going to be my biggest payout for a few months. The day I went to order my car. Any good commentators from Mac? I forget. I think it's Motive Wave or something like that. GTS if possible. GTS is very. Right now it's at 109,000. I added the bucket seat. It's 158, 80, 30. It's 153 before bucket seats. Putting me how close it is. Payouts, effects-based payouts, being yourself, not teaching and telling people what to do. Algorithm. No, I was just there for service. I was just there in the parking lot. My car got ordered. My car is in Germany, not even built yet. My car is a brand new car. It's gonna look exactly the same as this, except it's gonna be different color. It's gonna look exactly like this. Come on. It'll look exactly like this. That's my exact build. Has Apex asked me to trade a live account? Nope. I only made around. I'm gonna cross 200K this time around. This week, I'm gonna cross 200,000 in Apex, but that's still very far from the million. How many cars do I have now? 3. I have my truck, my work truck, my Jeep, and my Boxster. I'm gonna be getting the Boxster ready for sale very soon and try to sell it before June. Barcelona's playing right now. Yeah. Alright guys, I'm gonna call it a stream here. I forgot the Barcelona's playing right now.
I don't think we're gonna trade anymore today. It's just, I don't know what this is. So, we'll call it a day here. We'll get some better action tomorrow. Whoever tuned in, I want to thank you guys for stopping by. We try to do this as much as we can to day trade, build our account slowly, reach payout. But I currently use Apex. I have around 250k in funding with them. They have a current sale at the moment. It's 80% off plus a 1-day pass, meaning if you buy it today, you can hit your profit target, the amount you need to pass your challenge that day, and then tomorrow you can have your PA account and start making money. Usually it takes about, their rules are 7 days of trading, so it's a really good deal. You can use my code that you see up on the screen. Just make sure you enter this code at checkout, and once you enter it, you should see a green check mark beside. That means it's been entered correctly. You should be good at that point. That means the code's valid. But appreciate all of you. We're here every day, as much as we can, just grinding, trying to do better. I'm not trying to be so hard-headed. I'm trying to be disciplined and patient. I'm trying to take A+ setups, you know? But today was filled with a bunch of Fed FOMC speakers. That's why I think the market's in a bit of a neutral state. Just had a huge sell-off yesterday. Bulls a little shaken, bears taking profits potentially, but also watching, hoping it goes lower, getting squeezed out if we go higher. But we haven't gone anywhere today, so we'll see if we can make a few videos. I don't know what we'll make a video on, but we'll see. We need to start getting back in the groove, so appreciate all of you. Thank you.